This is a very interesting setup. One of the most powerful structural points that we have in the Australian dollar is the 96.52, and the 96.52 was the beginning of a very big bear market, if you will, in the Australian, that took the Aussie down from 96.52 in 2008. Actually, it did that in our first seminar we traded that in our first seminar in London. We were doing it in Heathrow, and it came down from, and we took that trade, and that move was from 96.52 all the way down to 64. You had 3,000 pips. We are now 50 pips above that structure point. We still want to be looking to go long. We still want to maintain our long bias, but definitely my structural short and my stop to the downside would be the 96.52, because if it comes below 96.52, I do not want to touch the Aussie on the long side, because that means what has happened before is going to happen again. It is the previous behavior at that price point, and that's what we trade. We trade behavior, so people do the same things over and over again. So if the price, people will remember whether they have made a lot of money by shorting at the Aussie below 96.52, or they have lost a lot of money by staying short and being stubborn on the bull side. We don't care who's right or wrong. If it comes below 96.52, again, like exactly what we did with the euro, we are going to be buying it above the 130.80, and that is whether it is bullish, bearish, there is technical fundamental problems with the euro. If the Allied Irish Bank is going to file for bankruptcy, with all that negativity, we are up on the euro 800 pips. So we don't care, we shouldn't care, it's none of our business, and that's it. So as long as it's above the 96.52, we are going to be long the Australian dollar. If it breaks below 96.52, I'm going to short the Aussie dollar, and the 96.52 is now my new structural short to the downside. Okay, now where will I buy the Aussie dollar? This is the intraday chart. Guys, I want to show you something magnificent. Hold on one second. This is something that happens once in a blue moon. Remember the price point. Well, let me see what this goes. Hold on, Barry. Okay, guys. Guys, do me a favor, because I'm using one screen. So hold on until I'm done with the pair. And I said, do you have any questions? So pop it up, and then I will be able to read it, because now I have to bring the screen down and bring it back up again so I can answer. So unless it's really something very important, hold on until I'm done. Okay, so Barry, guys, all of you that are in the room, I want you to see this. Look at this point over here. By looking at our way we identify the chart and structural points, you could see that this price point, just on the intraday chart, that point, which is the 96.24, is a structure point. Look at these highs, look at the structure. That is a structure point, which is 96.24. And I told you on the daily chart, the structural point is 96.52. So between a trend change on the intraday and the trend change on the daily, It's only 30 pips, which is absolutely, I mean, you cannot get as precise, more precise than this on a chart. I mean, having 30 pips on two structural points on the intraday chart structure trend change, and on a daily chart a structural trend change, both of them in about 20-30 pips from each other, that is as powerful as it gets. So we are not going to touch the Aussie anywhere unless it's below the 96.24. Now where will we go long that baby if we're going to take it long? The answer is quite simple. We're going to take it above the 97.33. We want it to trade above 0.9733, and if we buy it above the 9733, we're going to put our stop below the market side, which is the 9713. So we are going to go long the Aussie above 9733, and we're going to put our stop below the market side because this is where the market has settled. So our stop on the long position is going to be 97.13, again just plus or minus a few pips. The structure short is the same, and let's see the next structure long on the Aussie. The structure long is the all-time high, which is the 98.14. So basically we are 100 pips away from the next structural point or all-time high. So if it gets above the 98.14, you're looking at history in the making. Okay, so this is the Aussie dollar. Okay, so we're going to go long the Aussie above 97.33, and if we do, we're going to place our stop below 97.13. So basically we're risking about 20-25 pips on that trade. If we're going to go short, we're only going to go short below the 96.52, which is also our structural point. On the intraday is pretty much the same. You can jump in a little bit early. The structure long is the all-time high, which is the 98.14. The structure short is the 96.52. So we are only, so our short point is the structure short, and it is also the stop on the long side. So I think the short stop, I need to fix that. So if we're going to go short below the 96, you just want to put the stop a little bit above it, so you don't want to give it too much room. So the short stop, I'm just going to leave it the same number because it is the structural point. Okay, so this is the Aussie dollar. All right.